No, so basically, it's a document that outlines the fiscal plan for the next year and a half, for the remainder of this year and next year. And it also aims to answer a series of questions given the changes that the economy has to face with a lower price of oil. So I think it's important to take 2 steps back and give you the broader macro picture with regards to the shock from oil prices that I think is important, especially when you look at Colombia from an international perspective, because it's very easy to draw a parallel between the experience Chile and Peru had with the fall of copper prices, which actually happened before the fall in oil prices, and what's taking place in Colombia. And I'd say it's important because there's one very big difference. And in Colombia, the impact in lower oil prices is mostly felt through fiscal channels, meaning the lower revenues on the government side related to oil-related activities. Whereas in Chile and Peru, these copper-related activities were a much larger percentage of GDP than what the oil-related activities in Colombia are. So in Colombia, oil-related activities, and this depends on when you do the measurement, are around 6 to 7% of GDP. When you look at the experience in Chile and in Peru with the fall in copper prices, copper-related activities were actually a much larger percentage of GDP, hence the shock to the general economy tends to be a bit stronger and happens through different channels. So in Colombia, the big impact really comes through the decrease in fiscal revenues, because oil prices, give or take the number, depends on what price for oil you use, but around 15 to 17% of government revenues come from oil-related activities. Taxes on oil companies, and the other large channel is dividends from Ecopetrol, the government-owned oil company. So that's where the big shock takes place, which is the reason the midterm fiscal outlook is so relevant, because it details the plan of how the government is going to deal with this decrease in oil prices. And the integral part of this is what we call the fiscal rule. Fiscal rule is legislation by which there is a limit to the fiscal deficit that the country can incur at any given point in time. It basically has 3 components as relates to this broader discussion. First one is what we call the structural fiscal deficit, which is around 2.2%. And that is basically the fiscal deficit that the country is allowed to have when the economy is operating at full capacity, so full employment, etc. There is an incremental margin by which the fiscal deficit can marginally increase if economic growth is below its potential rate, which is called the economic cycle. And on top of that, there is what we call the energy cycle. The energy cycle basically corresponds to the increased room that the fiscal rule gives us to increase the fiscal deficit in order to absorb or partially absorb the shock from oil prices. So why is it relevant and how is it calculated? Basically, the deviation from steady state growth is pretty simple to calculate. There's an implied effect in government revenues from lower growth. And at the same time, what the fiscal rule does is it consults a committee of experts that determine how much room the government has in order to increase its fiscal deficit to counter the oil cycle. How is that calculated? Basically, what the fiscal experts have recommended, which is what the government uses, is they take the difference between the long-term price of oil and the spot price of oil. And that differential is what allows us a larger fiscal deficit. The way the long-term price of oil is calculated is it's basically a moving average, which takes the last 4 years of oil prices, the current oil price, and the next 4 years of forecasts of oil prices to come up with what we call a long-term oil price. What does that mean? That over time, within 4 to 5 years, the spot price and the long-term price of oil should converge. That is the same exact time period through which we are allowed an incremental fiscal deficit, which gets smaller every year and eventually converges with structural deficit within a period of 4 to 5 years. So it's a very powerful mechanism because it allows the government to increase fiscal deficit when times are difficult, which is an important counter-cyclical policy. However, at the same time, it creates a very, very strong pressure for us to meet that exact fiscal deficit because we have to do it, yes or yes. And in order to do it, we also need to make significant efforts on the government income side and on the government spending side. So the beauty of the rule is it gives us flexibility, but at the same time, it creates very strict guidelines that also make us reduce expenditures and make efforts on the fiscal side to increase revenues. And I think that is very important because it's strict, but at the same time it's counter-cyclical, and politically it's a very valuable instrument in order for us to push spending cuts and revenue increases. So that's more or less the framework within which we operate. And I'll give you a copy of this, which is actually the presentation of the midterm fiscal outlook, which I think is probably quite useful for you. You have a copy of it in English. So basically, what this means in numbers, so to speak, apologies, is that for 2015, we are allowed a larger fiscal deficit, which is a total of 3% of GDP. And for 2016, that fiscal deficit increases slightly to 3.6% of GDP, and from then on, basically moves back to a much smaller figure, which corresponds to the structural deficit. So within 5 years, by 2020, we should be back at the structural fiscal deficit, which is 1.4% of GDP. So it's important because it gives us room for adjustment, and it spreads the adjustment over time in order for the economy to adjust in a non-traumatic way, so to speak.
Is it built into the framework so that you don't have to have it passed by Congress? It's just there to use and you don't have to get anything passed?
So the law that limits our fiscal deficit has been passed by Congress, and that's what we call the Fiscal Rule. Within that rule, built in is the mechanism for flexibility when the economic cycle leads to lower GDP growth than what we would have under full employment. And at the same time, whenever there's any type of oil shock, principally in Colombia, it's because of the oil prices, that is built in. And so there's a committee of experts that's designated under this law that dictates how much that fiscal deficit can increase. And it's also very important to realize that when there is a shock to the economy, like a fall in oil prices, the adjustment is done 3 ways, and that is the way it's contemplated in the fiscal law. In order for us to meet the targets, we need to lower expenditures, we need to find new sources of revenue, and at the same time we are allowed a slightly larger deficit in order to slowly adjust the economy back to what we could call a steady state. So those are the fiscal numbers. And
just a clarification, the Fiscal Rule is a law, but it's not a constitutional amendment. And I ask this because there's been talks about having a balanced budget amendment in the US Constitution. Italy has a new balanced budget amendment in the Constitution. This is not constitutional.
Perfectly honest with you, I know it's a law enacted by Congress. I'm not 100% sure it's constitutional, but I'll get back to you on that one, I promise. But it's not balanced budget because it actually gives you room
the
for
Italian constitutional amendment has that flexibility. It's a pretty vague language in the amendment, but it talks about sort of fiscal cycles, economic cycles. So there is that.
That makes sense. And I think what's also important is not only do we have the mechanism in place by law, but we are strictly adhering to it in a moment of shock. Government revenues that come from oil prices are around 17%. So that's a pretty significant shock, and the government is 100% committed to comply with the fiscal rule. So I think these rules are incredibly important, but once they pass the test of time, they become even more structurally ingrained and difficult to change. And the government is 100% committed to complying with the fiscal rule, as the numbers that are presented in the midterm fiscal framework show.
In terms of the business climate for inward investment from corporations, I guess it hampers your ability a little bit to, for instance, lower corporate taxes. This is not a good time to do that, but it's something you want to do eventually, right?
And that is part of the broader discussion on the structural tax reform that needs to take place that the minister spoke about. So when you look at our fiscal numbers, part of what was done in the last tax reform was basically extend certain taxes that were meant to be temporary in the first place. Which begs the question of what will take place once these taxes expire. And the entire idea behind the Tributary Experts Commission is basically to look at tax reform on a structural basis as opposed to individual taxes that are easy to implement and simply get extended. And so any change in taxation would really be part of a consequence, would come as a consequence to the recommendations we received from the expert committee. The expert committee is due to give Congress results of its first study in December of this year. And then these recommendations will obviously be analyzed and taken into consideration. But anything of the sort would really be part of a structural tax change that would come as a consequence of the tax expert committee.
Okay.
The minister spoke about the 4G infrastructure.
Yes. So in 2012, the government enacted the legal framework that enables the use of public-private partnerships in Colombia. And the 4G program corresponds to the roads that will be built under this public partnership program. They're called APPs in Spanish. So if you hear of APPs and carreteras 4G, that's what it is being talked about. There are basically two types of large infrastructure projects that take place. You have the public initiative private partnerships, and you have the private initiative private partnerships. And the main difference between the two is in the public APP program, the government basically structures projects, and then these projects are competed upon and assigned to whoever wins the concession for these projects. These projects basically look for the private sector to put up the resources to build the infrastructure. Once the infrastructure is completed and available, subject to certain standards, then over time, these private enterprises recoup their investment through tolls in the case of roads, and future budget appropriations from the government. The program has been quite successful. Their first and second wave of public-private partnership road concessions have been assigned to companies at this point. And it's the companies who basically won the concessions through a bidding process. We expect the financial closing of the first wave of these programs to happen between now and year end. And then once that takes place within a year, we should, by next year, as a matter of fact, we should already see the construction process begin. We are talking about a program that totals approximately 40 trillion pesos.
40 trillion.
So that is, give or take, 28 billion or something. So it's quite a large number. And once these roads begin, the growth dividend is immense. Not only because of the actual people being put to work to build the roads, but once you have efficient transportation systems, transportation times come down and all the development that basically comes as productivity increases, is something that we should expect to see in the short term.
I'd read, I can't remember if it's you're 6th or 8th in the world in terms of investor safety. In terms of investing in Colombia, investor safety, I think you're ranked 6th or 8th in the world by one of the banks, and I just wondered if you can comment on that and how you use that to promote, investment in infrastructure.
Absolutely. I think if you are a foreign investor and you come to Colombia, you will find that it's a place where the rule of law applies, and to that extent, it is an attractive place to invest. And clearly, we will see that as these concessions have their financial closings from now to year end. It's quite an amount of money that the private sector needs to come up with in order to begin construction. And the fact that this is going to happen by year end, I think, is a testament to what you're saying. If that were not the case, we would certainly have a difficult time raising the funds. We are fortunate that international investors are well received in Colombia, and I think they have been historically, which creates a virtuous cycle of investors continuing to come to the country.
And is it mostly pension funds investing in the infrastructure, or is it corporations, or what are you seeing in that, in the private side?
There are actually a combination of all sorts of different agents. So you have local construction companies as well as international construction companies participating in consortium with local entities. And then on the funding side, the funding is primarily coming from three sources. You have pension funds locally that are investing in these projects through funds that are specifically designed to invest in infrastructure. There is the banking sector that has already committed to investing in these programs through loans. Basically, they finance these projects. And at the same time, there's going to be a large capital markets component, both locally and abroad, in order to finance these projects. So the projects are really and truly financed through a combination of different entities. There's also the Financiera de Desarrollo Nacional, which is a government-owned entity that functions as an infrastructure development bank that is also going to be helping finance these projects. So given the amount of resources that need to be put to work, it's truly going to be a combination of all these different sources of financing.
And I guess I presume that includes the big global. I think of Macquarie in Australia or Sintra. Are those they're pretty major investors?
I would have to check exactly where they are invested in, but these are all the players that basically look at the space.
I have a couple of more questions about sort of budget concerns, two more elements that I want to know your take on. One is there any concern, or how is Colombia preparing for possibly hiking interest rates in the US and how that might affect especially foreign exchange and what that means for the budget? And the other question I had is about sort of the process of conflict resolution here. In terms of, I was reading a World Bank document that was just published about restitutions that might be in play in the negotiations. I'm not sure I'm portraying this accurately, but correct me if I'm wrong. And some of the restitutions could be significant.
So, one step at a time. Restitutions. It's all going to depend on what the outcome of the peace talks is. So, unfortunately, until I think the government and everyone in general has a bit more clarity on what these are going to look like, it's very difficult to answer the question. That said, I am very sure that the government is not going to reach an agreement that significantly endangers the budget in any way. So I'm very comfortable that whatever is agreed to is going to be rational and is going to be within Colombia's ability to finance, pay, etc. Your other question?
Interest rates.
Interest
and
rates.
foreign exchange.
Of course, foreign exchange. So, interest rates are clearly going to go up. The question is when. So, I would break it up into two different compartments, I would say. Apologies, I'm getting over a cold. On the financing side, it's something that we've budgeted for. I think at this point it's pretty much consensus that interest rates will be increasing. So the impact of that on debt and new debt issuances has been budgeted for. We obviously look to be proactive in finding windows of opportunity for our debt issuances abroad, and that's going to continue being the case. The exchange rate will potentially be impacted by an increase in rates, as is the case with most emerging market currencies. That being said, it's important to understand that the FX rate in Colombia is an adjustment mechanism. The Colombian peso is a freely floating exchange rate, and as commodity exports fall in dollar terms because of a decrease in oil prices, the adjustment mechanism is the exchange rate, and that's not going to change in any way. So as much as a devaluation is going to be a consequence of higher rates, at the same time, it is something that will make Colombia much more competitive. If you look at what has happened to Colombian industry over the last 10 years, with the significant increase in oil exports, there was a very strong revaluation of the Colombian peso, which truly hurt the local industry and the local manufacturing, as they became less and less competitive in international terms, given the currency's revaluation. As the currency depreciates, we're going to see this tendency change again. So a devalued peso is not a problem. It's actually something that makes the Colombian economy more competitive. And it is the adjustment mechanism. So to that extent, it's something we're comfortable with.
I just had one other question. In terms of your investors and infrastructure, other than the US, what countries are you seeing coming into Colombia that are interesting?
There's been significant interest from the Japanese. As a matter of fact, Sumitomo became an investor in the FEDN, which is the National Development Infrastructure Bank, and I can give you a bit more information on that. I believe we have a presentation. And these investors tend to be long-term investors, and they are also investors that know project finance quite well. So I would expect to see them be an active player as well.